Investing is often judged by screenshots of huge gains, winning trades, and success stories that make the journey look easy. What rarely gets shared are the mistakes, the periods of uncertainty, and the losses that happen along the way. That's why I decided to take a completely transparent look at my stock portfolio after 3 years of investing. No cherry-picked results, no hiding bad decisions, and no pretending every investment was a winner. The reality of long-term investing is much messier than social media suggests. Today, we will talk about a stock portfolio after 3 years, real numbers, real gains, real losses. So before we get started, make sure to hit that like button. Also subscribe to my channel. 10. The first investment was more emotional than financial. The hardest part of the entire journey was not choosing the perfect stock or predicting the market. The hardest part was making the decision to invest the first dollar. There was always a fear of buying at the wrong time, choosing the wrong company, or losing money immediately after investing. Many people spend years waiting for the perfect moment to enter the market because they believe a better opportunity is coming tomorrow. However, one of the first lessons learned was that waiting forever usually creates a bigger loss than making a thoughtful investment and allowing time to work. 9. The first year was about learning. Not earning the first year of investing was filled with excitement and disappointment. Some stocks increased quickly and created the feeling of being a great investor, while others dropped almost immediately and created doubt about every decision. The biggest mistake many beginners make is believing that a few months of results determine whether they are successful investors. In reality, the stock market can be unpredictable in the short term. A good company can experience a temporary decline, and a poor investment can rise for reasons that have nothing to do with long-term quality. The first year taught the importance of research, diversification, understanding risk, and avoiding emotional decisions based on daily price movements. 8. The biggest winners were not always the most exciting stocks at the beginning of the journey. It was easy to become attracted to popular stocks that dominated headlines and social media discussions. Companies promising revolutionary technologies and massive future growth seemed like the obvious path to huge returns. However, after 3 years, some of the most consistent performers were often the businesses that received less attention. Strong companies with reliable earnings, solid management, and sustainable business models sometimes outperformed the exciting investments that promised impossible growth. The biggest surprise was understanding that investing is not a competition to find the most dramatic story. It is about owning valuable businesses that can continue growing over long periods of time. 7. Some investments failed completely. One of the most important parts of an honest portfolio review is discussing the losses. Not every stock became a winner. Some investments lost significant value, and a few decisions turned out to be mistakes. There were companies that looked promising during research but failed to meet expectations. Some industries experienced unexpected challenges, while some businesses simply could not compete effectively. Losing money was painful, especially when those investments were made with confidence. However, those losses provided some of the most valuable lessons. They taught the importance of managing risk, avoiding overconfidence, and accepting that even experienced investors make mistakes. The goal of successful investing is not to avoid every loss, it is to make sure the winners are strong enough to overcome the mistakes. 6. Market crashes tested every decision. It is easy to call yourself a long-term investor when the market is rising and every investment is producing profits. The real test comes during market declines. There were periods during the 3 years when the portfolio value dropped significantly. Seeing months of gains disappear in a short period created stress and the temptation to sell everything and protect the remaining money. This is where emotions become the greatest enemy of investors. Panic selling during downturns can turn temporary losses into permanent ones. The difficult lesson was understanding that market declines are a normal part of investing. While every situation is different and losses can continue, staying focused on long-term goals rather than short-term fear became one of the most valuable habits developed. 5. Regular investing beat trying to predict the market. One of the biggest discoveries during these 3 years was that trying to perfectly predict market highs and lows was almost impossible. There were moments when the market looked too expensive but continued rising. There were times when prices looked attractive but continued falling. Attempting to time every move created stress and often led to missed opportunities. A more consistent approach of investing regularly over time helped reduce the pressure of finding the perfect moment. By continuing to invest through different market conditions, the portfolio benefited from purchasing shares at various prices and allowing time to play its role. 4. Dividends and small gains added up. When people imagine successful investing, they often think about one stock increasing by hundreds or thousands of %. While those stories exist, much of real wealth building comes from smaller gains that compound over time. A stock that grows steadily year after year, combined with dividends that are reinvested, can create significant results over a long period. After 3 years, some of the most satisfying progress came from seeing small returns accumulate. The biggest realization was that investing is often a game of patience, where consistency and time can become more powerful than chasing the next big winner. 3. The portfolio performance was not a straight line. Looking at the final numbers after 3 years, it would be easy to focus only on the total gain or loss. But that final number hides the emotional journey behind it. There were months when the portfolio reached new highs and created excitement about the future. There were also months when it lost a significant percentage of its value and made every decision feel wrong. The path to long-term growth was filled with volatility. This experience showed that successful investors are not people who never experience uncertainty. They are people who learn how to manage their emotions when uncertainty arrives. 2. The biggest mistakes were emotional decisions. The most expensive mistakes during these 3 years did not come from lacking information. They came from emotions. Buying a stock because everyone else was talking about it, feeling greedy when prices were rising, or feeling afraid during market drops led to some of the worst decisions. Investing requires patience and discipline, but human emotions naturally push people to do the opposite. The biggest improvement came from creating clear rules, researching investments carefully, and making decisions based on long-term goals instead of short-term excitement or fear. 1. Time was the greatest investment advantage. After 3 years of gains, losses, mistakes, and successes, the most powerful lesson was that time mattered more than almost everything else. The biggest growth did not happen because every stock was perfect or every decision was correct. It happened because money was given the opportunity to remain invested, recover from mistakes, and benefit from the growth of successful investments. Many new investors focus on finding the next stock that will make them rich quickly. However, the most successful investors often focus on patience, discipline, and allowing compound growth to work over many years. The stock market can create wealth, but it usually rewards those who can stay committed during both good and bad times. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.